I am sure many of you have faced great difficulties navigating the treacherous market that is now unfolding before our eyes. An active epidemic has stopped the world in its tracks, with everyone panicking about the future. Traders around the world have seen losses mount up. The severity of this event was not possible to understand just 1 month ago. A true black swan that has wiped out entire companies and gains made over years. I myself have suffered as well, but I'm not panicking. I believe we are approaching the bottom, and in this video, I'm giving out my biggest pick yet. In these volatile conditions, it's necessary to be calm and collected. Buying at the right time during this epic stock market downfall could be your ticket to amazing returns for years to come. Things do not look good for anybody, but if we look at history, we can draw some lessons helping us guide our investment strategy for the rest of 2020. Believe it or not, this is not the first time the world has faced a serious epidemic. Although one of this magnitude has not been felt for over a century, it has happened multiple times before and will continue to occur in the future. In 1918, the Spanish flu, otherwise known as the 1918 influenza pandemic, resulted in the infection of nearly 500 million around the world. This at a time was around 27% of the world's population. After it was over, nearly 50 million people lay dead as a result of the virus. Comparing this current outbreak to that one isn't going to result in a fair comparison, but what is fairly understood is that the virus didn't bring the end of the world. And while the effects were heavy, like all else, life moved on. The stock market continued to chirp forward, businesses came back, innovation continued, and people looked forward. While today's economy and media are much more connected than 100 years ago, the psychology of humans has not changed. The mind is an elastic band capable of pushing through adversity that is currently unthinkable. And while panic and fear can result in short-term emotion, giving way to poor decision-making, lackluster performance, and overall negativity, long-term, humans excel and move forward. When you clicked on this video, I'm sure that you were not expecting a pep talk or a psychology lesson, so I'll stop before you click off. But I just want everyone to keep in mind the importance of this historical lesson as we move forward. All the greats have kept cool when everyone else was panicking, and that is exactly what you need to do to survive this financially. Guessing the bottom at this point is going to be incredibly hard. As I'm recording this video, the SPY is at $248 a share, 27% below its all-time high of $339.08. This is a scary drop and one of the largest in history. If we compare the financial crisis of 2008 to this current drawdown, we are only halfway there. From October 2007 to March 2009, the S&P 500 shed 56% of its value. And while that's quite a historic drop, it doesn't come close to touching the legendary Great Depression. In the time period between September 1929 and June 1932, the S&P 500 lost 86% of its value. Now the question is that comparable to what we have today? I think many of you will agree that this 10-year bull run has had serious issues with it. Without any doubts, the market was overvalued and was in desperate need of a correction. The virus has brought that and more, with many predicting a recession. But my hypothesis is different. If we look at today's market, we are not being affected by the collapse of banking, nor are we in the same state as 1929. Today's businesses are flourishing and we're posting great earnings. Although stock prices have been inflated, the core of the economy is in place and continues to be in place. The virus will without doubt cause considerable temporary harm, but at the end of the day, I think of it as hitting the pause button. The previous financial crisis was hitting the rewind button. Take for an example January 1973 to October 1974. During this time, the S&P 500 lost nearly 48% of its value. At this time in history, nearly every single Middle Eastern nation attacked Israel at the same time. An oil embargo essentially crippled the West, sending energy prices soaring, and inflation topped 10%. On top of all that, President Nixon was forced to resign after Watergate. The nation has faced serious issues before and prevailed. Facing a virus with a mortality rate of less than 3% is serious, and will without a doubt send the economy into freefall. But once the panic wears off, I believe a quick turnaround is sure to come. My hypothesis is that the S&P drops another 10% maximum, bringing the total top to bottom at 37% down. From there, we're going straight to the moon. Progress on a vaccine has already started. Presidents are now warning of the worst that is yet to come. Central banks are easing, and stimulus packages are being passed as we speak. Humanity is universally aligned against a common enemy, and without a doubt, I believe the markets will react to this, finding a bottom. Surely earnings will be slashed, and a lot of the downfall will be well deserved, but future earnings should in theory return to the mean, and with that, prices as well. Certain specific industries have suffered some serious drops, more so than the overall economy. One of those is the airlines. With nearly all travel essentially stopped, they are bleeding heavily. Jets, an ETF offered on Robinhood, invests in both US and non US companies involved with the US airline industry, involving passenger airlines, aircraft manufacturers, and airport and terminal services companies. Trading at $32.36 prior to the outbreak, it has since plummeted 51%. With a basket of holdings that includes Delta, Spirit, Frontier, and American Airlines, investing in jets is essentially investing in the entire airline industry, an industry that will without any doubt continue to thrive after the virus. While there are legitimate bankruptcy concerns with certain airlines, Jets displaces those concerns by providing diversification in an industry that will without a doubt continue to thrive in the future. At $16, I have purchased a significant number of shares for the long term, and with more limit orders set at the following price levels: $15.45, $12.88, and finally $10 flat. The airline industry has relatively recently experienced an event close in magnitude that we can base our recovery hypothesis on: 9/11. Following the terrorist attacks that day, the US grounded all US planes for 3 days, and a fear of flying and war concerns were enough to push airline stocks down nearly 60%. This was all following a complete shutdown in the markets from September 11th to September 17th. The New York Stock Exchange and the Nasdaq were closed, the longest shutdown since 1933. For those who can remember 9/11, they can understand the simple uncertainty that followed. Regardless, airline stocks following the attacks recovered at an incredible rate, basically erasing all losses within 3 months. I'm not predicting the same speed of return here in our present scenario, but we can imagine that after things settle down, air travel will remain a growing industry accessible to more and more people around the world. Even today, in the middle of the panic, there was a glimmer of hope. For one, Dr. David Sinclair from Harvard posted an interesting paper which claimed the treatment of chloroquine, plasma from recovered patients, and a steroid were enough to significantly boost patient recovery rates and help battle this awful virus. He claims researchers around the world are banding together online to share tactics, helping accelerate a cure or at least a patch. On the economic side, the President of the US tweeted that the US will be powerfully supporting industries like airlines that are particularly affected by the epidemic, ensuring investors that federal help will be there given the seriousness of the situation. As always, guys, thank you for watching. I would love to hear everyone's opinion regarding my play and how you are navigating this tough market reaction.